Hello and welcome to another episode of Monday Markets. As always, we're brought to you by Woo. Links available in the description below. So we have quite a candle on our hands here. And if you were living under a rock, what essentially happened during the course of this move here was that there was a crypto news publication, so-called news publication, that said that one of the Bitcoin spot ETFs had been announced. So the market obviously rallied on that news massively, and then it turned out to be untrue. And so the market fell just as quickly. In open interest terms, it's actually quite extraordinary just how many people got bodied by this move in both directions. You can kind of see that here. At its peak, open interest went up to 6.4 billion and then fell within, 15, 20 minutes, down 15% down to 5.4 billion. So just a massive, massive wipeout bit of price action here. And also, the way a lot of these wicks work, it's not like a ton of sellers come into the market or a ton of buyers come in the first place. It's not really that. It's more the absence of liquidity. So when the ETF news was announced, the ask side of basically every single order book became absolutely empty. And then as news came out that it was maybe untrue, the bid side became empty. Plus, there was just a lot of selling going on. But whenever you get the outsized type of wicks and the price action that almost doesn't look like it belongs, it's a combination of liquidations and empty order books and liquidations into empty order books. And that's how you get your big price dislocations. It's when someone has an urgent demand for liquidity and no one in the market is willing to provide it, unless the market moves quite a bit into their bids or asks. So where does that leave us? It's always quite interesting when you have this kind of outlier wick because all the levels get messed up. When the volatility relative to what you had before goes completely out of whack, you're sometimes left wondering on other time frames. I think the daily is really going to be my focus here. So if you wanted to ignore much of this price action and see how it resolves anyway, I think the weekly and the daily are your best time frames. So on the weekly, again, 28.1, 28.2, this kind of cluster high mid-range has been just a really good level, including resistance at mid-range before the fall off that we had. I think, once the dust settles, and the market starts sort of trading normally again, if you will. If the market can hold much of the progress that was made and close the week above 28, I think that'd be a pretty bullish weekly outlook. Or at the very least, it would give you a very clear invalidation that, look, we have this very important weekly level at 28. We've done all the price action that all the combinations of price action that one could desire. We had the move above it. We had the retest from the underside, and now we've had a breakout. Right. So at that point, at least you have a bull bear line on the weekly at 28K. Another reason that I like it is because it's just as significant, if not more significant, on the daily. And that's a faster moving time frame. So you have to wait a whole week to see if the market is willing to support the strength that it showed today. And I think the same argument applies. If this is a daily breakout, obviously it's messy where it's ended up because it's a very fast move and into this sort of prior area. The pre-breakdown range at 29K. We actually tapped 30K today. But structurally speaking, I think if, fake news or not, retrace or not, as long as the market can hold on a daily closing basis, 28K, then even if this wick weren't there, then that would still be a compelling bullish argument. I think that's a really good way to sort of think about and process this type of price action, which is that, if I take my levels, I take my high time frame closes, if this wick weren't there, what would my analysis be? And I think there is some merit to that, which is why I'm still focusing on levels and the high time frame candle closes, because they can certainly filter for a lot of the noise that surrounds these types of market events. So bull bear line on the weekly and the daily is 28K. Obviously, if we take the peak bearish scenario, is that this was just a mega top and shouldn't have happened at all. And we're just going to proceed to, just like on some of these other moves that we had, essentially get a big outsized move, it goes nowhere, and then bleeds down and retraces. So I think if you're stalking shorts, there are really two areas where I think it makes sense to be bearish. One is if the market really starts to push in and backfill the last sort of quarter of this wick, especially into daily resistance, then you have a decent argument that the so-called, the inefficiency has been filled, the market profile has been fixed, the cracks have been filled in a similar way to how we spend most of our weekends. And then you have at least a clear invalidation being the reclaim of this range. That's something. The other bearish one would be, again, a loss of 28K, because at that point, the argument is this should have never happened. Now it's bled out. It couldn't even hang on to its strength. And we should just take this as an anomalous move up through this high, and then it's just going to retrace, to the base, if not lower. So in terms of areas to do business, I think it's a bit tricky. Price action is always a total pain in the ass after this type of move, because the order books are empty and no one really wants to trade, and a ton of the participants have been completely washed out, as evidenced by the open interest. But I think in terms of just kind of your analysis for this week or directional bias, I'm still pretty laser focused on 28k as a level. I don't really see anything else that's more compelling than that. Even on the intraday and lower timeframes, you end up in the same area. On the 4 hour, yes, we are retesting the former range right now, but we've also broken out of the range that we were coming from. So contextually, it's better to do business at the extremities. And to me, the extremities are 28k and then basically pushing back to fill in a lot of this wick. So that's BTC. I guess the TLDR version, the summary version, is it's bullish if it can hold this strength and, reclaim these high time frame levels in spite of it being fake news, and it's bearish if it loses the high time frame level, and that's only that argument is only strengthened by the fact that it was fake news. So I guess you have to let the dust settle a little bit and watch 28k. ETH BTC got murdered on this move, understandably. Again, it's sort of ETF driven stuff, so no surprise there. A bit of acceleration in ETH BTC as well. I'm still curious to see if the weekly close is going to hold this range low at 0.57. That would be pretty interesting, because at the same time, ETH USD, I think, came close to, no, didn't quite get there. But, this weekly level, the range low at 15.14, that would have been nice. For the time being on ETH, again, structurally, doesn't really matter, or hasn't made as much progress as BTC. I would have preferred if it hit this range low at 15.14. That would have been nice, and an extension in ETH BTC, like we discussed on Casual Friday. You kind of have both ETH charts at an extremity. Instead, we don't have that. And this daily rally is sort of, it's not very helpful. It's not very helpful because ETH BTC still looks weak. Especially if the weekly close is absent above that range low. But even this daily chart, we're dealing with basically this portion of price action here, and it's not a range that's particularly clear to me. Even on the weekly time frame, honestly, it's a bit messy. I'm not exactly sure where the clear reclaim level would be. Maybe something, to return to our roots back to 1700, something like that would be okay. But this is a lower low close on the weekly, and this bounce really structurally isn't doing much. So ETH BTC is weak, so any optimism on ETH USD is going to have to be moderate. Maybe that changes next week if we get a really nice either acceleration or reaction on ETH BTC. But I think this is just today's price action is quite telling as far as where the narrative strength continues to lie, and it is with BTC. That's really all I've got to say. I don't think altcoins are in a particularly interesting spot. Again, there's always like a churn chop period after these sorts of dislocations and distortions in price. They make for okay trading conditions, not my favorite. I would simply ignore the wick at this point, or at least not have that at the forefront of your analysis. And I still think the higher time frame levels are going to be helpful guides. If the move is bullshit, it'll fail below 28 and that'll become self-evident. If there's enough strength to support even a fake news type of breakout, then even if there's like a consolidation here and volatility gets compressed again and the market sort of starts trading back at whatever your version of equilibrium is, once the dust settles, the candle closes are less likely to lie, which is why I think having those clear lines in the sand, if you will, makes sense. And to me, that's still 28k for BTC. And I would also say that don't get terribly surprised if you get chopped up on lower timeframes, because books are still very thin. So some sort of mean reverty, choppy, generally kind of thin price action is to be expected. That's really it. I probably dragged this video longer than I should have. Again, at the risk of repeating myself, the summary version is let the dust settle, see the high time frame candle closes, and that way you don't have to care about the news. I do want to address one point. I think this is quite popular on Twitter, that, hey, look at the size of this move. This shows just how bullish the market is because it's fake news. The market still went up this much. Imagine if it were real. I think that's compelling to some extent, but it's very hard to know these things, especially if this ETF keeps getting kicked down the road. I think, you have to compare, you have to sort of merge price plus news. So for example, let's say we get the ETF news come out, the market just continues to rally and goes crazy, and we get the ETF release around monthly resistance on BTC, then I think I'd be much more inclined for that to be a sell the news type of event, or at least close to it. Whereas if we get it, we have a momentum break here, it starts to consolidate, and then, above 28K, and it doesn't really get rejected at 30, and, starts to hug the top of this range, and then we get the kind of spot ETF news for real, then I would expect that breakout to be genuine and for there to be space left to go. In a similar vein, if the market starts selling off and then the ETF gets denied and the market really accelerates into high time frame support, then that in itself would be a potential buy setup once the wipeout comes, or it'd probably be a much bigger one. So again, I wouldn't sort of read too much into the individual reaction of the market from the fake news and then try to sort of extrapolate what that would mean if the news is real. I would simply, at least with, the area in which I'm comfortable in, still look at the high time frame levels, still look at those closes, and not get chopped up on the intraday and let the dust settle. The weekly will be very helpful because by then the news will have been fully digested. I still think the daily is also helpful because 28 is such an inflection point. And in terms of the short-term trading range, I do think on the support side, there's 28K, and on the resistance side, it's some version of 29 to 30K, and more so than levels sort of to the left. Yes, you could draw resistances at 29, 5, 7, whatever. I'm more looking at how much of this wick are we going to backfill. So the range is 28K as support, and wick backfill is resistance. Hope that makes sense. Apologies for missing Monday markets last week. Don's schedule is a bit wonky, so is mine. We're getting back into it. Thanks for watching. Thank you to Woo for supporting the show. Yeah, that's it. Bye.